Hi there, my name is Hitesh and I welcome you to this new course presented by FinGrad Academy. We have made series of courses so far and I hope you have had a good time learning something out of it. Now through this course I'll be talking about a very specific aspect of trading and it is used by almost all the traders. And I'm talking about the usage of candlesticks. How does one go about using candlesticks? What exactly are candlesticks? Why is it so important for traders? Why do traders prefer candlesticks over any other form of charting patterns? What are the various single candlestick patterns, multi candlestick patterns, trade setups which are formed out of it? We'll be discussing about all those in step by step, chapter by chapter basis and try to learn taking a trade out of them. Now in the first chapter, I'll give you a brief introduction about what are candlesticks and how does one go about reading candlesticks. So let us jump discussion right into that. So if you are a trader who is doing day trading or long-term trading, the basic question which comes to any trader's mind is that what are candlesticks? Why is it talked about so much? Why do traders love it so much? How to read and interpret 10 candlesticks? Because a lot of people look at the candlesticks and they get scared. It looks like a bunch of red lines and a green lines. What do actually those candles mean? What is the information or knowledge which is being passed on by the candlesticks to the traders? What are the various candlestick patterns? How does one understand and generate trades using the single candlestick patterns and the multi candlestick patterns? We aim to explain each and every of these questions through this course. So let us brace ourselves for this ride and learn about candlesticks. So this is how a regular candlestick chart looks like. There is no technical indicator which has been put here. This is how a simple candlestick looks like. There's a bunch of red lines, there's a bunch of green lines, and they all provide certain information. In general, green would mean something which is going up, red would mean something which is coming down, and the same logic applies to even candlesticks. A green candle generally means a bullish candle and a red candle in general means a bearish candle. Now, what are candlesticks? So candlesticks are the most commonly used and the most interactive form of charting patterns. You have line charts, you have bar charts, but they don't provide as much information as a candlestick would do. A line chart is just plotted by joining the closing points for a day and you get an overall idea about what does the market look like on closing basis. But it doesn't tell you information about what was happening throughout the day. The market could have gone all the way up but closed at the bottom. So the line chart will show it closed there only and you wouldn't know what was the price action around it. Similarly, for a bar chart, it although provides similar information to what a candle does, but the visual appeal and just by looking at the glance of a candle, you get to understand what is the feel for the day. But the same can't be said about the bar chart. Now there are basic 4 components of a candlesticks, that is the open price, high price, low price and the close price. If you look at the picture on the right hand side of the screen, it's a green candle. So basically in the green candle, the top of the candle is the high for the day. The low of the candle is the low for the day. The open of the candle is always below the close of the candle, and which is how it becomes a bullish candle. And most importantly, candlestick makes relevance in all kind of time frames. You could use minutes, hours, daily, weekly, monthly. All those charts can be plotted and made sense by using the candlesticks. Now, how did the concept of candlestick generate? If you look at the picture on the right hand side, you can guess it right. Yes, it has to be a Japanese invention, because the mustache which is twirling down is associated with Japanese men, and even the candlesticks are actually known as the Japanese candlesticks. So the fundamental theory and the concept of Japanese candlesticks was invented almost 300 years ago by a rice trader called Shokyo Homa. He was born in 1716 and passed away in 1803. So his logic was that if he plots all the prices which are important for the day, he can make sense what is expected or what could be expected in the following day. It was a very nascent idea, but he made a killing out of it. A lot of money was made by him, and slowly it became a pattern which was used by other rice traders also. And the concept of candlesticks was introduced to the world of trading by a trader called Steve Nissen in his book Japanese Candlestick Charting Technique. So it was first used in the rice trading and eventually got introduced to all form of trading in 1970s. Now what are the various components of a candlestick? Now this slide is very important, so I would want you to pay a little more attention. It tells you about all the components which form a part of candlestick. So there are 4 important components. That is the open for the candle. Basically it is the price at which the candlestick starts. The close is that price at which the candlestick for that particular time frame stops. high is the maximum price which was achieved during that candle, and low is the lowest price of the candle. Now if you look at the picture on the right hand side of your screen again, now let us first focus on the green candle. A green candle basically means a bullish candle, and a red candle means a bearish candle. So in green candle, the high and low are the top and the bottom points of a candle. That is common for both red candle and the green candle, but the differentiating factors lies in how are the closing and the opening plotted on the candlestick. So in case of a green candle, the open of the candle is below the close of the candle, and in case of a red candle, the open of the candle is above the close of the candle. So those are the differentiating factors between a green candle and a red candle. Now this is a simple candlestick chart of Infosys Limited. Now if you look at this chart on your screen right now, so the market has been showing a momentum on the upside, and just by looking at the chart also you can say, okay, the momentum looks to be on the upside, and which is the beauty of a candlestick. Just by having a quick glance you can make out, okay, what is the momentum in the market? Have the green candles been bigger than the red candles? How is the size of the candle? How do we interpret out of it? And each and every candlestick is a certain form of candlestick pattern. We'll be discussing about those patterns in chapters to follow, but each and every candlestick gives you a different idea. But the overall look at the chart can tell you, okay, this is what the overall pattern looks like right now. Now, what exactly is a bullish candle? We've understood what is a candlestick. We understood the various components which comes along with it. But what would be a bullish candlestick? So when the close of the candle is above the open of the candle, it is called a bullish candle. If you look at the picture on the right hand side of the screen also, the close is above the open, and which is how it has become a bullish candle. The central body, it basically the candle has two different parts, that is the body of the candle and the wicks of the candle. So in case of a bullish candle, the central body connects the open and the close of the candle, and that is the main body of the candle. The upper shadow basically in case of a bullish candle connects the close of the candle and the high of the candle, and the lower shadow connects the open of the candle and the low of the candle. So these are the three characteristics of a bullish candle. Now what would a bearish candle looks like? It is exactly opposite of a bullish candle. Again, the central body connects the open and close, which is common to what a green candle does, but the upper shadow connects the open of the candle and the high of the candle, and the lower shadow connects the close of the candle and the low of the candle. So these are the differentiating factors between a bullish candle and a bearish candle. I hope we understood this. If you haven't got it, I would want you to rewind the last 1 minute and again understand the bullish candle and the bearish candle. Let us find the anatomy of a candlestick. So the candlestick, a bullish one would be either a long white line or a long green body, and a bearish one would be a long black candle or a red candle. Long body indicates basically there's a lot of trading activity, there was a lot of volume in the market, and the candle is a green candle with a long body, which would mean the buyers had a higher say. The market couldn't sustain down and it just kept going up. And if the candle is red, you would understand the sellers had a higher say. The buyers couldn't sustain, and eventually the candle became a big red candle. And similarly, a small body candle could either mean two things. Either the market had low volume and there wasn't much of a price action, or it could mean there was a lot of volume but there was a strong tussle between buyers sellers. No one wanted to give anyway, and it would mean rangy market, but there was a lot of price action. So these are two different kind of candlesticks, a long body and a small body. Now what exactly does a shadow of a candlestick mean? I've talked about the body of a candle. Let us learn a little bit more about the shadows of a candle. Shadows are basically the long thin lines which are above or below the body of a candle. The body of a candle connects the open and close of a candle, but the shadows are those parts which are above those body parts of the candlestick. In the upper shadow, the high is marked on the topmost part, and in case of a lower shadow, the low is marked at the lower half or the bottom of the candlestick. Now, having understood the anatomy, broken down the candle, bullish candle, bearish candle, what makes the candlestick so popular? Why is it so sought after by the traders? The most important thing is you can easily comprehend the candlestick. Just by looking at the candle, you don't need to know the prices around it. You would know, okay, who had a higher say, whether it was aggressively bullish or aggressively bearish, or was it a rangy day. Just by having a quick glance, you can understand what was the feel or the price action for the day. It tells you in detail about the proceedings or the happenings for the day. Basically, if you look at the line chart, you wouldn't know what happened during the day. But if you look at the candlestick, the whole candlestick, you would know what was the happening, what are the price action, what are the various events which transpired during the candlesticks. And most importantly, it helps in understanding the sentiment of investors and traders in the market. Now, another important factor which differentiates a candlestick is that it helps in understanding what could likely move in the market in the foreseeable future. If you see a big green candle, you can be preempting that okay, the market could be going up in days to come. And if you see a big red candle, you can understand that the momentum in the market could be weakening. I'm not saying it gives you 100% accuracy, but the accuracy is much more compared to any other charting pattern. What are the learnings or the key takeaways from the basics of candlestick chapter? Candlesticks are the most commonly used and one of the most attractive form of charting tool. There are four important components of a candlesticks which are abbreviated as OHLC, that is open, high, low and close. The green candle signals strength and the red candle signals weakness. If the open of the candle is below the close of the candle, we can say the candle is bullish, and similarly if the open of the candle is above the close of the candle, you can say that the momentum in the day or momentum for the day is bearish. Most importantly, various time frame charts can be plotted using a simple candlesticks, and they will provide you good communication about the feel for the market. So that is it from us in this chapter of understanding the basics of candlesticks. From the next chapter onwards, we'll try and understand the individual candlestick patterns. We'll talk about both single candlestick patterns and the multi candlestick pattern. I thank you for your patient hearing. I hope you learned something from the first chapter. I'll again see you next chapter and we'll learn more about the candlesticks in detail. Thank you so much.